If you're looking for the next big winner in the energy drink market, Celsius just might be it. They're leveraging Pepsi's distribution muscle. They're appealing to health-conscious consumers and grabbing market share from Red Bull and Monster. They are poised for massive growth, and in this video, I'll highlight the catalyst behind that. Be sure and watch all the way to the end, and I'll show you step by step the trade that I'm putting on the trading platform. Hint, it's the poor man's covered call option strategy, and it will bring massive profits. Before we dive in, smash that like button for me down below. I really appreciate it. It helps out the channel tremendously. You're certainly welcome to subscribe as well. We're at an all-time high for subscribers. Also, download the free options workshop in the link below. And there's a paid course if you're new or beginning options, or you just want to level up your game. First, let's break down what makes Celsius so unique in a crowded market. What sets Celsius apart is how it's positioned for both short-term momentum and long-term growth. The PepsiCo partnership completely changed the game, giving Celsius nationwide distribution power in the US and opening up doors for global expansion. On top of that, the revival of Rockstar and the addition of Alani create a strong family of brands, giving Celsius multiple paths to capture market share. At the product level, Celsius has nailed consumer demand with its sugar-free, health-focused energy drinks, a perfect fit for millennials and especially women. This has created a repeat purchase pattern that looks a lot like a subscription model, where customers keep coming back week after week. Finally, the fundamentals are improving after a brief hiccup in 2024 when Pepsi's rollout caused some over-ordering. That's now behind them. Revenue has normalized and is steadily climbing. Altogether, this puts Celsius on a completely different growth track than most players in the space. Right now, it's shaping up to be a three-horse race between Monster, Red Bull, and Celsius. Celsius has already captured about 20% of the U.S. market, and analysts see a clear path toward 25 to 30% share over the long term, which would be incredible growth in such a competitive space. Meanwhile, the competition is showing cracks. Red Bull is in a messy leadership transition, splitting control among 3 CEOs after the passing of its longtime founder, something that rarely works well in a global consumer brand. Monster is facing its own crossroads, with its co-founders aging out and one stepping away, leaving leadership in the hands of a 72-year-old CEO. And really, the prime for a CEO is about 45 to 65. That stands in sharp contrast to Celsius. CEO John Fieldly is just hitting the prime of his career, and under his guidance, Celsius has executed flawlessly on distribution, partnerships, and growth. With rivals distracted, Celsius has the opportunity to turn market momentum firmly in its favor. Now, this is where the bigger picture comes into play. Celsius is still in the early innings of its growth story, with a market cap of just $14 billion compared to Monster's $60 billion valuation. The runway ahead is huge. In the U.S., retail distribution is still expanding, with the goal of getting Celsius and Alani onto every major shelf across North America. But the real game changer will be the 2030s. Just like Monster rode international expansion to massive growth over the past decade, Celsius is preparing to leverage Pepsi's global network to scale internationally. Combine that with a strong product lineup and brand momentum, and Celsius isn't just competing anymore. It's setting itself up to become a top 10 global beverage company. So when you look at Celsius market share gains, leadership strength, and massive runway to grow both in the U.S. and internationally, the long-term story is crystal clear. It's a high-growth company with the potential to multiply in value. And that's exactly why I'm not just buying shares and sitting on them. What I'm going to utilize is a poor man's covered call to capitalize on the upside, as well as collect monthly income month after month as the stock moves up and trends up. Well, there's going to be occasional pullbacks as well. So here we go. I'm going to jump into the live trade right here. All right, guys, here we are on Yahoo Finance, and you can see Celsius and the 5-year chart. You can see that it was just trading up near 100. It was like 94 here just back in May of 2024, and it's at 54 right now. So a huge runway, a lot of growth opportunity ahead. And the 1-year target that the analysts have that they're covering is $66. It's at 54 right now, so still that's a 20% gain that they've got for it. I see it going much higher than that. As far as the growth estimates, look at next year, 29.3%, so huge growth ahead. In the current year, 66%, so unbelievable. And then you can see all the top analysts following it. Everybody's got it buy overweight except one. What's going on with B of A securities? Come on. All right. And let's go on to the Tasty Trade trading platform. This is my favorite for trading options. And you can utilize the link down below. There's some benefits if you go through my link, but it's super intuitive and a lot of tools. So I really like it. But you can go to the finance page. And one thing I like to look at right here, we click on this little button right here. I don't know what that's called, but it gives you, you can go to the financials and you can look at it by quarter or annually. And you can see revenue and net income are increasing, and then same with assets versus liabilities are staying in check. And the ratios you can look at, it is a little bit of a high PE right now, but it is priced because it's a great value right now. What do they have as the PE? 139, yeah. But it's a high growth stock. Gross margins are 50%, so that is excellent as well. Now we can click on this little chart right here, and we can look at the chart. I put some lines in here. I can see that you can see the trend up since February, and we're at the bottom of that trend right now. So it's a nice time to get in. And then I've got the green line and the red line. The green line is the 50-day moving average, so it's up above the 200-day moving average, which is the red. And definitely trending up and at the bottom of the trend. So perfect time to get in to the stock. The trade, let's go to the trade page. So you can see positions that I have on in Celsius right now. I've already got a poor man's covered call. I actually put this on this morning, and it's up 110 minus 68. So I don't know, $50 this morning. But I'm going to do the same trade. I'll show you how I set this up. And then I've got to put credit spread on 52.42. But let's go to the trade page, and we are on the table mode. And I'm going to go out a year, so 357 days to expiration. And we're on the trade page table mode. We're going to open up this September 2026 chain. We just click on it to open it up. We've got calls on the left, puts on the right. So on the left, we're going to buy an in-the-money call. So I like the 50. It's the 67 delta, so that gives you what it does is that 67, it follows the only 100 shares of stock, simulates it 67% of the time, basically, or up to, I don't know how you word that, up to 67%. If the stock moves up $10, it moves up $6.70. There you go. But $14.75 to buy it. So we're going to click on that to buy it. We've got calls on the left, and we're going to buy right here and sell there. But we're buying the in-the-money call. This has, because it's a 67 delta, it's 14.45 is the mid price. Now, if you go to the curve mode here, this is what I like about the Tasty Trade platform, and then you hit on analysis, you can see as the stock price moves up, just like owning the 100 shares of stock, it profits. So if it gets up to 80, P&L at expiration is $2,043. We're paying $14.45. Now, one option contract controls 100 shares of stock. So this $14.45 that we're paying is really times 100. So we're paying $1,445. Now, if we were to buy the 100 shares of stock outright, it's $54.40, the current price, times 100 shares. It's $54.40, $5,440. So it's usually about 20% the cost to utilize a Leaps option, the way I play it, where I go about the 65 delta out a year and buy it that way. So what's nice is, just like a traditional covered call, we can sell a short-term call against it and collect that monthly income month after month. And there's some pretty good premiums in Celsius. The IVR is 33 right now. So again, that gives the higher the IVR, the more premium you collect. So we're going to go out to November. I like to go typically 30 to 45 days to expiration. We're already at 21 in the next option chain. I like the regular option chain. So in October, it's 21 days. I'm going to go out to 56, open that up, and then we can sell either, I like to go about the 30, 35 delta. Typically, I would go out to 60 or 65 right now, 28. You can go out to 65 and collect $2, $1.99. So if we click on that, watch the cost of this. That immediately puts $2 in our account, or times 100, so $200. And we can do this month after month as the stock price makes its way up. So we can click on that, and then you can see down to 1263, and then you hit review and send and place the trade. Or we can collect a little bit more, go to 62.5, and we can also go to 60 if we're a little bit, if it had a big move up. We're up almost 5% today, so you might want to go to the 60, collect a little bit more, $3, and we only pay $11.45 to do this, and there might be a slight pullback because we're up so much today. But I think Celsius, this trade is one of the best available right now. So you hit review and send and place the trade. All right, guys, Celsius definitely has the catalyst, the leadership, and the growth trajectory to challenge the big guys, Monster and Red Bull. So are you utilizing the poor man's covered call? Let me know how you're trading Celsius right now. And be sure and hit the like button down below and subscribe. Leave a comment, ask a question. I answer everyone. And if you like this video, watch this next one.